Hi, everyone, and thank you for joining me for another episode of my series Q&A with Wall Street. In this episode, I'm going to do Amazon stock and its latest question and answer session it held with Wall Street analysts. So let's get right into it. The first question coming from Morgan Stanley, Brian Nowak asking, what are your key focal points, product categories, or investment priorities that you're most focused on to drive durable multi-year growth in that North America retail segment as we recover? The second question, how do you think about the potential margin potential of that business over the next few years as you sort of grow into the warehouse and the warehouse network? All right, so let's go into the answer from Amazon's CFO, Brian Olsavsky, saying, what we've said is when we look back to our cost structure pre-pandemic, we were just in the end of 2019, early part of 2020, we were starting to roll out one-day shipping in North America. And we had expectations of what our cost structure would look like. That has changed quite a bit in the last 3 years due to a doubling of our network expansion. So their business trajectory completely changed because of the pandemic, and that's understandable, right? They were going on a certain direction, and then all of a sudden, they got this burst in customers and sales growth as consumers were locked down at home. Non essential retail businesses were closed, and we had stimulus checks, and so increase in spending, increase in purchasing power coupled with a decrease in the number of places that we could spend the money created this absolute surge for Amazon. And so they needed to invest to fulfill that, and they more than doubled their network expansion. So that, think about the last 20 years they spent building out, spending billions of dollars building that network. They more than doubled it in the last 3 years. That was an over $100 billion investment. So now they're gonna need to digest that and work to optimize that. It's gonna take some time, and so that's what the CFO says. We have to make and expect to make big improvements in 2023. CEO Andy Jassy jumps in saying, and being maniacally focused on the customer experiences is always going to be a top priority for us. And that showed during the times of the pandemic, right? When they had a choice, do they err on the side of over investing in capacity to make sure the customer experience stays excellent? Or do they err on the side of underinvesting in capacity but run the risk of slower delivery times and a worsening customer experience? They chose to overinvest in capacity to make sure the customer experience is top notch. So now we're working really hard to streamline our costs and trying to do so at the same time that we don't give up on the long-term strategic investments that we believe can meaningfully change broad customer experiences and change Amazon over the long term. Going on, probably the number one priority that I spent time with the team is on reducing our cost to serve in our operations network. There's a lot to figure out how to optimize and how to make more efficient and more productive. If you think about doubling the number of fulfillment centers you have and then adding a very large transportation network, and you realize that all of those facilities have to link together to get products to customers, there's a pretty big expansion in the number of nodes in the network. And so all of this, it's not just the fact that it spent so much money and now it needs sales to increase in order to leverage those costs, to leverage that space, but it's also in terms of strategic, of logistical management, right? To figure out where to put the inventory to meet the customer demand, to optimize your network so that you leverage those costs, you leverage those investments. Now, that's not going to happen overnight. It takes time. So the CEO goes on, and so to figure out how to be really efficient across all those links and have them be highly utilized and to get the flows in those facilities working the right way, it takes time. In other words, telegraphing to investors, don't expect this to happen in the next quarter or 2 quarters. This is going to take time. bear with us while our costs remain elevated and our sales growth is constrained. And what you saw after this, after February 2nd, when this earnings call and the Q&A session, the results came out, the stock price came down 4, 5, 6, 7% following these results, as investors said, you know what, I don't think we want to ride along with you in this journey trying to figure things out after you spent over $100 billion. It's a risky endeavor for investors to just stay put and have faith in Amazon to figure these things out, especially because they've got a new CEO in place, right? Andy Jassy is a new CEO. Jeff Bezos is no longer at the helm. Maybe investors would have been more lenient with Amazon stock if Jeff Bezos was still at the helm. They would have had more trust in Bezos' ability to figure these things out, to run the business more profitably, to get these things right. But a new CEO coupled with these unprecedented challenges, and investors are a little bit skeptical, and you saw the stock price come down following this Q&A, and you also have seen the stock price come down significantly off its high. It's down, I believe, more than 50% off its highs. And so you're beginning to understand that this is a difficult task. They may or may not figure it out, and that's troubling investors as remember, risk and return are two sides of the coin. If the risks are elevated, investors are going to require a higher return to compensate for those elevated risks. And Amazon's risks have certainly been significantly elevated over the last 3 or 4 quarters. Significantly elevated. And so you can understand the investor skepticism following this Q&A session. Okay, so that's all I've got for this video. Thank you for tuning in, and I'll see you next time. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.